I've read a lot of news about the oil and gas industry, and I'm going to do my best to regurgitate the things that I've learned and the things that I've read. Now, here's the deal. We're at a 5-year underinvestment cycle for the commodity of crude. We have not invested enough for tomorrow's energy. Now, everything Biden has done is permeated with the crazy leftist agenda to replace fossil fuels with renewables. And they've only gotten to 4 to 5% as where fossil fuels is being 80% of the equation. We need fossil fuels, and we have figured out that fossil fuels is still important. Every time you go to the pump, every time you read the newspaper, you're seeing, hey, energy is important. And we've become very ignorant towards energy, thanks to the administration in place spending billions of dollars to brainwash the world into thinking that climate change is going to destroy the world, fossil fuels is at fault, and, oh, by the way, renewable energy is going to replace everything and fix the problem. Well, they haven't fixed the problem. And so the truth came out, okay? Now, here's the thing. Most people do not realize they're still producing as much oil as they did before they started dropping bombs in Ukraine. That shows you just how important crude oil is. I mean, China and India are buying as much cheap Russian oil as they can. Now, here's the deal. There's a potential come January, we're going to lose a lot of the crude as those sanctions kick in. In addition, right now, Russia does not have the incentive to even produce 10 million barrels a day. 4 million barrels of that goes to pay for the industry. Another 3 million barrels pays to keep their government open and paying for various things in their country. The last 3 million is sold in cash. So they could have cash in euros and USD because most of the commodities are sold in that. If they're buying oil, if they're buying energy, if they're buying other commodities, such as foods or what have you. Well, where's their incentive to sell that last 3 million as they've been sanctioned? Their banks have been sanctioned, so they don't need that cash anymore. And so they have a 3 million barrel a day rug they could rip out from underneath us at any point. And Biden and the other world leaders are talking about putting a price cap on Russian oil. They're going to pull the rug out from underneath us, and that could happen at any moment. You can see oil prices. I mean, in the event we see a major recession, I'm talking major. They're saying that oil would drop down to $85 a barrel. $85 a barrel. There was a time under Trump when oil was $55 a barrel. That $85 oil would have been incredible. Here's the thing. A lot of analysts are basing their price prediction on OPEC having spare capacity and on America being able to come to the rescue and produce more shale. First off, shale is the most expensive barrel of oil to produce, and it's the fastest declining asset in the world as far as oil because the formation is so tight. We were not able to produce shale until fracking. Fracking gives us the ability to increase permeability. And oil could flow out of a formation that was never intended to produce, but that doesn't last. You frack the well, and eventually it's going to go back to the way it was intended to be, tight. And so that's why they go from 1,000 barrels a day and they drop down to 80 to 100 barrels a day very quickly. And so we cannot rely on shale. The banks lost money on shale. U.S. banks invested billions and billions of dollars in shale, and they lost their butts. Who is going to invest the $200 or $300 billion that is needed? I mean, JP Chase did a very thorough analysis, and they said we're $1.7 trillion. In order to bridge the gap of the deficit between demand and supply, we would need to spend $1.7 trillion. Who is going to spend that money? Who's going to pay for that? In OPEC, the spare capacity just isn't there. They're basing their numbers based upon what they're able to do for a short period of time. When they went toe to toe with Putin, when they had that supply war, when they flooded the markets with oil, if you take any oil well, whether it's in the US, in Russia, Saudi Arabia, you could turn up the spigots and that well could double its output, but for a very short period of time. Everyone in the oil and gas industry that's drilled an oil well understands why. You can't do it for that long. You'll burn out the well. And so the SPR, the Strategic Petroleum Reserve, is releasing 1 million barrels a day. And we're still over $100 a barrel. I mean, Russia's still producing as much oil as they did before the Ukraine war. The Strategic Petroleum Reserve is releasing 1 million barrels a day, and we're over $100 a barrel. The SPR reserve ends in October. What do you think's going to happen if we lose Russian oil and we lose the Strategic Petroleum Reserve? Where do you think oil prices are going to go if they're already over $100 a barrel and we have their oil? And there's something I want to say about the oil that Biden sold to China. Okay, and so everyone's getting upset at Biden for when we're having a energy crisis here in the U.S. Gas prices are at record highs, commodity prices are at record highs. What in the hell is Biden thinking by exporting oil? Now, as much as I love to roast Joe Biden, I don't really like the guy. He's good for oil. He's been good for business. But you got to understand something. Most of our refineries here in the U.S. are set up for heavy sour crudes. That's why the Keystone Pipeline was so key, because we're short. We were at that time when we were building that pipeline, we're short about 800,000 barrels a day of heavy crude. And that pipeline happens to have the ability to flow 800,000 barrels a day from Canada all the way to us. Now, if our shale oil, most of our oil comes from shale, most of that oil is high gravity, sweet crude. Well, the refineries in China and Saudi Arabia are set up for the higher grade crude. Our refineries are not. And the reason why is because most of our oil from the 70s, 80s, and 90s was coming from the Middle East, from Saudi Arabia. Their crude is a heavy crude. So why would we be set up for shale oil when most of our oil over the last several years has been imported from Saudi Arabia? So we have to export our shale and import heavy crude, okay? So Biden is at fault for many things, but I don't have an issue with that. I mean, it's just part of the deal. We need to export oil. And the Strategic Petroleum Reserve, 40% of that is sweet crude, and the other 60% is sour crude. So that we don't have the refining capacity to refine that much sweet crude. So it makes sense to export it. Now, and here's the other thing. Oil is a global commodity. For instance, if India and China's demand skyrockets overnight, what is that going to do to oil prices? It's going to skyrocket too. Now flip that over, and if demand in China and demand in India drops, what do you think happens to the commodity? So if we supply China, if we supply other countries with more oil, it's also going to indirectly affect our local prices. It's a commodity thing. It's a global commodity. Okay, so I disagree with a lot of the things that the far right, Fox News, what they're saying about Joe selling oil to China. Okay, don't have a problem with that. It's a refinery problem, not a. We don't have a crude problem as far as locally. Okay, we have a refining problem. Now, we are fundamentally short on supply, and it's the tightest the markets on record has ever been, okay? But the problem is that the physical markets are telling us something different from the financial markets. Now, the financial markets are priced based upon what the future holds. The commodity markets are priced upon today's supply and demand, what is happening to today, okay? They are pricing commodities based upon a future, a dismal future of that. And so that is going to cause a bull market. I mean, we were already, look at what happened during the times of COVID. They were saying that the demand for oil was going to drop by 30, 40 million barrels a day. We would be at a 60 million barrel a day demand. But we only lost about a 10 million barrel a day demand, and it came back quickly, okay? And that caused a bull market for oil. And so you have a lot of analysts missing it. Now, Jeff Curry, Goldman Sachs, and many other analysts, the top analysts, are still on point for $140 a barrel. Just yesterday, Jeff Curry says we're still on point for $140 oil, okay? And there's many, many other analysts that are agreeing with what he is saying, and they're all repeating the same thing, okay? And so there's no question that we are at a oil deficit. There's no question that our oil is underinvested. There's no question that we have a supply gap, and it's going to cost a lot of money, and there's nobody out there that's willing to dump the money that's needed to do it. And I don't blame the banks for not wanting to invest in oil, because they lost their butts in shale, because shale oil is the most expensive barrel of oil to produce, okay? So they lost their butts in oil. We are going to continue down this. We're already 5 years into this underinvestment cycle. It's going to continue. We're still not investing enough. And the analysts are relying on U.S. shale. Again, you cannot rely on a shale formation, a shale play. The conventional oil wells that were found in the 20s, 30s, 40s, 50s, 60s, 50, 60 years ago, they're still producing this day, but they're getting older. But shale plays, they don't last 50 to 60 years. They last 5 years. And so we had this, we had a shale revolution from 2012 to 2019. And then all of a sudden, we go from 13.2 million barrels a day, lose 2 million barrels a day in a very short period of time. Why? Because it's shale. If it was conventional, we wouldn't be in this situation. All we have is shale to increase output. You can't rely on that. You can't rely on U.S. shale. So here's the deal, guys. There's nothing more patriotic than investing in oil right now. It's your patriotic duty to invest in oil, or to get out there and educate the masses. We need oil. We need to stop the madness of this green energy agenda. And we need to drill for oil like never before. I mean, look at Warren Buffett. I mean, he just dumped another $700 million in oil just yesterday. At any moment, Putin could pull the rug out from underneath us and drop 3 million and remove 3 million barrels a day from the markets. And that could happen either because Putin's being strategic, or we're putting sanctions on Putin. We're about to lose 1 million barrels a day from the strategic petroleum reserves. We're about to find out that right now OPEC is producing 2.5 million barrels a day less than expected, than they should be. Why is that? Is it because they ran out of spare capacity? Is it because they're having miscommunication amongst the partners of OPEC? Are they lying to us? I mean, America doesn't have it, guys. We do not have the spare capacity. We do not have the ability to increase to the levels that the CEOs of these major oil companies in the U.S. are saying, we can't do it. They're trying to appease the governing administration. I mean, imagine if you're getting letters from governing authorities, you're going to tell them to get them off your back. I mean, they want to preach the message, hey, we're doing whatever we can to increase oil output, but they're not. Why? Because they aren't going to get on Fox News and admit to the world, hey, shale was fun while it lasted, but the banks don't trust us anymore. Investors don't trust us anymore because we lost money. I mean, shale is a losing proposition. I will never invest in shale. I made my first oil investment 28 years ago. In shale, my first time was in 2004. And it was a complete failure. And I learned the truth about it. And then come 2012, when everyone was talking about shale, I mean, every major news organization talking about the shale revolution, how amazing it is. I said several years ago, I said, shale's a flash in the pan, and watch what happens. And here we are. Guys, we can't rely on shale. We can't rely on Russian oil. We can't rely on renewable energy. Our only option at this point is to invest as much money as possible in the fossil fuel industry with hopes that we can get the commodity price back to normal levels. And so I truly believe when Goldman Sachs and other analysts are saying that we should expect $120, $130, $140 oil. In worst case scenario, in the event that we do have a global recession, they're saying $85 oil. The lowest I've seen is $65 oil. But at that point, if oil prices ever went down to $60 a barrel, it would crush the oil and gas industry again. And what happens when you crush an industry that's already been beat up? Supply drops, and it's another bull market for oil. Or Putin says, you know what, I'm going to pull this 3 million barrels a day off the market. Saudi Arabia, OPEC. I mean, OPEC has already cut 10 million barrels a day during the days of COVID, causing oil prices to go up. Look, OPEC will pull oil off the market. Russia will pull oil off the market in the event that we have a major recession, and the commodity price will stay high. So I don't see, there's nothing in me that says oil prices are going to drop substantially. And everything that I'm looking at says to me that oil prices will go up. All right, guys, I'm Sean Pruitt, president of Kingdom Exploration. If you like this channel, please subscribe. If you're interested in investing in oil and gas, I don't involve myself in Shale. I involve myself in the things that worked back in the 20s, 30s, 40s, and 50s, and that's conventional oil. And contrary to popular belief, there is still a lot of conventional oil out there. Maybe not enough for hundreds of billions of dollars, but there's enough for the smaller outfits. All right, guys, we'll talk soon. Thanks.